Right now, as you're listening to this, the United States is facing a problem so massive, so precise, that very few people are even aware of it. $36 trillion. That's the amount of national debt America has accumulated, and every day it grows quietly, relentlessly. But here's the part that terrifies me. This isn't just a domestic problem. It isn't about interest rates or budget debates alone. This debt is creating a shift in global power, one that is quietly strengthening China while the United States clings to its illusions of economic supremacy. Most Americans believe their economy is still the strongest in the world. They read headlines about stock market rallies, tech giants, or the Federal Reserve's latest actions, and they feel secure. But the reality is much darker. The $36 trillion debt isn't just a number. It's a systemic force shaping international relations, trade balances, currency dominance, and ultimately global influence. And by the time the average citizen realizes what is happening, it will be too late to act. Let me explain why. This is not theory. This is not speculation. It's a pattern, a four-stage pattern that repeats every time a dominant economic power overstretches its financial system. History is filled with examples where debt accumulation, currency mismanagement, and overconfidence led to the rise of rival powers while the old guard stumbled. And today, the evidence shows the exact same mechanism at work, right under our noses. Stage 1 is the foundation. Every powerful empire, every dominant economy in history, starts with trust in its currency. In the United States, this foundation was laid over a century ago. The dollar became the world's reserve currency, initially backed by gold and later by military power and global trade networks. It created the illusion of stability. Economists, investors, and citizens alike were conditioned to trust in its value. The economy expanded. America's influence grew. Stage 1 complete, a system built on credibility, strength, and perceived invulnerability. Stage 2 is expansion and debasement. Once a nation has established a trusted currency, it inevitably faces mounting obligations. Wars, social programs, infrastructure projects, entitlement spending, all of these demand resources. The United States, since the mid-20th century, has financed more than its economy could naturally sustain. To meet these obligations, the government began borrowing, issuing debt, and relying on the belief that the dollar would always be accepted globally. But here's the crucial detail. The debt grows faster than the economy, and with it, the system begins to wobble. Interest payments alone now consume nearly $900 billion a year, more than defense or healthcare spending. And every borrowed dollar shifts power away from the domestic population toward those who control capital and global finance. Stage 3 is loss of control. As the debt rises and deficits widen, domestic policy options narrow. The Federal Reserve cannot simply print money without consequences. Raising interest rates slows the economy and increases the burden of debt. Lowering rates accelerates inflation and erodes purchasing power. Every decision becomes a delicate balancing act. But here's the hidden danger. Global players are watching, analyzing, and positioning themselves for the shift. Enter China. While the United States wrestles with internal fiscal constraints, China has been quietly strengthening its position. Its economy, already the second largest in the world, benefits from U.S. debt in multiple ways. China holds over $1 trillion in U.S. Treasury bonds. Every time the U.S. borrows, every time interest accrues, China gains leverage. It isn't aggressive or confrontational. It doesn't need to be. The math alone ensures influence. Stage 4 is the reset. Every time this cycle has played out in history, the dominant power finds its system destabilized, while rising competitors consolidate power. Consider Rome. For centuries, Rome expanded its reach while debasing its currency to pay for wars and public programs. By the time the denarius collapsed, new powers had emerged on the periphery, ready to claim influence. Or Germany post-World War I. The Reichsmark lost value at a rate that obliterated middle-class wealth, while foreign creditors and neighboring nations repositioned themselves. And now, the United States is facing the modern equivalent, a heavily indebted superpower, a domestic middle class stretched thin, and a rising China that is quietly solidifying global influence across trade, technology, and finance. To understand the stakes, look at the numbers. The US debt has risen from roughly $10 trillion in 2008 to $36 trillion today. That's a 3.6x increase in just 16 years. In the same period, GDP growth has lagged behind debt accumulation. Debt to GDP ratio is soaring, exceeding 120%, a level historically associated with economic stagnation and diminished global influence. Meanwhile, China's GDP has grown from approximately $5 trillion to $18 trillion, almost 4 times in 2 decades. It's not just economic growth. It's efficiency, infrastructure, manufacturing dominance, and strategic global investments, particularly through the Belt and Road Initiative. The math is simple. The higher America's debt climbs relative to its economic output, the greater the relative power China gains. But this isn't limited to trade balances or GDP comparisons. The $36 trillion debt has systemic consequences that are almost invisible to the casual observer. Every dollar borrowed adds pressure on the dollar's value, affects foreign exchange markets, and strengthens China's bargaining power. Every Treasury bond China holds is leverage. It can influence markets, demand concessions in trade or policy, and quietly position itself as a dominant creditor. And because the world still uses the dollar for international settlements, every misstep by the US creates opportunities for China to offer alternatives, such as the yuan, digital currency innovations, and bilateral trade agreements bypassing the dollar system entirely. History offers a blueprint. Consider the United Kingdom in the 19th century. Massive debt accrued from the Napoleonic Wars weakened domestic investment, while emergent powers such as Germany and the United States leveraged industrial expansion to grow influence. Or Japan in the late 20th century. Careful fiscal management allowed it to dominate regional finance, while global competitors wrestled with domestic instability. The lesson is clear. Debt is a silent weapon, and those who understand it can use it to consolidate power quietly. Right now, America is in stage 3, losing control. Inflation is resurging. Interest payments dominate the budget. Political polarization prevents decisive action. Trust in institutions is eroding. And while domestic focus is on short-term politics and social issues, China is methodically enhancing its global influence. It's building infrastructure in emerging markets, acquiring critical resources, and establishing trade networks that bypass American influence. The result is a quiet shift in the global balance of power, propelled not by aggression, but by mathematics and financial strategy. Stage 4 is inevitable if patterns hold. Once debt outpaces economic growth and domestic policy fails to stabilize the system, a reset occurs. Historically, this reset has taken the form of currency devaluation, political upheaval, or shifts in global influence. America's position as the dominant economic power is at risk, not tomorrow, not next week, but within the next decade if fiscal trends continue unchecked. And when the reset occurs, the benefits will accrue not to the American middle class, but to global powers that have positioned themselves to capitalize on this imbalance. To make this concrete, let's examine specific mechanisms. First, interest payments. $36 trillion debt at an average 2.5% interest rate costs roughly $900 billion annually. Every increment in rates magnifies this expense. This forces the government to borrow even more, perpetuating the cycle. Second, currency leverage. Every Treasury bond held abroad, particularly by China, creates a financial dependency. It's not an overt threat. It's the leverage of mathematics. Third, trade dependency. As America imports more than it exports, currency stability and fiscal health directly affect global supply chains. And China, as the largest trade partner and major holder of US debt, gains quiet, systemic power with every imbalance. Now imagine the consequences if this continues unchecked. The dollar's relative strength could decline, leading to higher inflation and interest rates. Domestic investment would slow. Borrowing costs for businesses and consumers would rise. Social programs and infrastructure projects would face funding crises. Meanwhile, China could offer financial stability alternatives, strengthen its currency's global role, and negotiate trade advantages that solidify long-term influence. The stage is set. America's internal challenges create external opportunities. The psychological impact is equally important. Most Americans assume wealth, power, and influence are constants. They see headlines about stock market highs and feel secure. But $36 trillion in debt isn't a static figure. It's a dynamic system exerting constant pressure. And history shows that the citizens of dominant powers rarely perceive the shift until it's too late. Rome didn't notice its fiscal decay until decades after it started. Germany in the 1920s didn't grasp the velocity of currency collapse until savings were erased overnight. And today, Americans risk repeating the same error. So what can be done? First, understand the system. Debt is not just a number. It's a mechanism of power transfer. Every financial decision, every policy misstep strengthens those positioned to benefit. Second, recognize that China's rise is not a coincidence. It's mathematical and strategic. Third, position yourself on the right side of these trends. That doesn't mean speculation. It means understanding asset preservation, currency exposure, and global economic shifts. Stage 4 doesn't have to be catastrophic if preparation aligns with the pattern. Finally, acknowledge this. $36 trillion is not just America's problem. It's a blueprint for global power redistribution. Those who study history, understand debt mechanics, and observe global positioning can see it unfolding in real time. The consolidation of influence, quietly favoring China, is happening now. The same stages that destroyed the middle class in past civilizations are clicking into place in the modern world. Stage 1 established trust and dominance. Stage 2 expanded obligations and weakened systemic control. Stage 3 is the loss of policy flexibility and economic leverage. And Stage 4, the reset, will favor those who have prepared, not those who assume stability will last forever. If you are paying attention, the math is clear. America's $36 trillion problem is not just a domestic challenge. It is a systemic shift that strengthens a competitor quietly, effectively, and inevitably. And just like Rome, Germany, and other historical powers, the consequences will be felt not by the elites who manage capital, but by the middle class and ordinary citizens who assumed security, stability, and inherited power would protect them. Understanding this pattern and acting accordingly is no longer optional. It's a necessity if you want to avoid being caught on the wrong side of history.